if you're a real estate professional, or if your spouse is a real estate professional and you're married filing jointly, so if you are a real estate professional or your spouse on a jointly filed tax return as a real estate professional, all your rental losses will offset any other kind of income. What does it take to be a real estate professional? I'd say about 50% of the real estate professional case law comes out of California, and it's mostly bad. Let me explain why. Because that's a federal court, so we can't really blame California directly as much as I would like to, because that's what the rest of the country does, by the way. It's your fault. Let me go through the tests and I'll explain why we have issues here. You have to show more time in a real property trader business, you have to show more time in the real property trader business than all other personal service hours. What does that mean? You work 40 hours on a W-2. You got to show 41 hours in the real estate. 41 hours in the real estate. And the real estate for this purpose could be more than just rentals. It could be you're a realtor, it could be you're a contractor, it could be you flip houses. You can combine all that. So I spend 20 hours at my W-2 job, 20 hours at my rentals, and another 10 hours as a rehab contractor. So I have 30 hours of real estate trader business, and I've got 20 hours of regular W-2. More than half my time is in some sort of real estate. This is, by the way, where California investors get killed. You guys here's what happens. This is very common. And I'm sorry, but this is true. I can back it up. Engineer at a company, makes $200,000 on his W-2, works at least 40 hours, owns 3 rental properties, 2 of which are in Nevada, and says he spends 41 hours a week on his rentals. You see the problem? Is that a believable story? I mean, what do? Fly to Nevada every week and cut their lawn? Feed them? Of course they don't spend that much time on there. They just put it on the return anyway. Evidently, in some circles, the philosophy is a 1040 is a good first offer. You guys got to work with me. Thank you. Look, I'm trying to keep it non-dull. I can talk like an accountant. You don't want that. The other tests for real estate professionals, that's the first one, and that's the hard one. In fact, what we see a lot of the time is if we have a high earner, a married couple, we have a high earner, if the spouse works either part-time or doesn't officially work, stays at home, which is unofficially a lot of work, especially if you have kids, but bottom line doesn't pull a W-2 or have a job like that, oftentimes the spouse will qualify as a real estate professional. They put enough time into the rentals on their own, they qualify and get the tax break for the couple. Now, what is my issue? What I've seen with California investors on real estate professional status for the spouse? Politics, spousal politics. Technically, sometimes the spouse could do it, and you ask, and as my dear wife said, I'm not doing that, I don't want to. And I won't repeat everything else she said. So there's always a catch, and the question is it a good fit for the spouse or not? And both spouses have to agree it's a good fit. The other requirements are 750 hours per year minimum in the real estate, so that's about 15 hours a week. And that's where it's a hard sell. If you have managed rentals, that's not going to happen. Or if you have 3 rentals, let's see, 5 hours a week per rental. Again, are you making them dinner? I mean, how do you put that much time in? 500 of those hours have to be hands-on. This is the material participation. There are seven ways to show material participation. The 500-hour hands-on is the one most people use, but there are other tests. And this is very important, very, very important, and often missed. There's a technical election that has to be filed on the tax return. It's the aggregation election. You have to say, for passive loss purposes, we want all of our rentals treated not each as a separate activity, because that's the default. You have 10 rental properties. Each one is its own activity. And without going too deep into what that means, trust the nice lawyer. He wouldn't lie to you. Each rental property is its own activity. You have to make an election if you're going to be a real estate professional that all 10 rentals are treated as one activity. And a lot of accountants miss this. It's very common. It's very technical. They miss the aggregation election. Write this down if you're interested in it. 469C7. That's the code section. 469, C as in Charlie, 7, aggregation election. if you're taking real estate professional status, every year have your accountant point to the return where it is. Don't trust him when you ask him, did you put it on there? Point to where it is. Because once you do this once, you should file it every year thereafter. This is missed very frequently, and people who otherwise qualify end up losing out. Now, here it says timesheet is not required equals timesheet is required. Let me translate the tax court's language for you. The tax court says you don't have to track your time, you don't have to have a timesheet. What they really mean is you have to have a timesheet. If you look at the number of cases that people win without having a timesheet, there are very few. So the tax court says one thing, but in this case does another. So you do need to track your hours, I'm sorry to say. Do I agree with this? No, I don't like bureaucracy. It's becoming more important to track what you did than what you did, which is why our country is becoming less productive and more bureaucratic. But unfortunately, it's the rule. Track your time if you intend to qualify as a real estate professional. What are real property trades or businesses? Development, redevelopment, construction, reconstruction, which for me is rehab, it's just a synonym. Acquisition, conversion, rental, operation of any of these, management of any of these, leasing or brokerage. Brokerage of real estate. For example, a loan broker, there's case law that says you're not a real estate professional. Loan brokering is not a real property trader business. This is a handy little, see if you can qualify. For some of you, it's a no-brainer that you can't. For some of you, you might be able to. Particularly if you're borderline, track your hours. Now, the people who don't have to track their hours are usually the full-timers. Look, all I do is I'm a realtor and I'm a landlord and I've got 20 properties. Okay, you know what? You probably don't have to track your time. I can get that out on deposition or testimony because it's a no-brainer. But if it's at all close, make sure to track your time. Sir?
So just for clarification, you're talking about passive income and or active income?
If you're a real estate professional, your passive losses, aka your rental losses, can be offset, or they can offset your other income. If you're not a real estate professional, those losses sit in a separate bucket and they won't offset other types of gains. So they just sit there without doing you any good. So it's adding insult to injury. The fact that you had a loss is the injury, and the insult is, and by the way, you can't write it off until we say you can. Real estate professional is one way around that. Let me give you the other way around it, which demographically won't apply to most of you, but I'll give it to you. If you make adjusted gross income, married filing joint, $100,000 or less, 25 grand of rental losses can be used against other types of losses. For every $2 over 100,000 adjusted gross income, so it's the last number on the first page of your 1040, adjusted gross income. For every $2 over 100,000, you lose $1 of the 25 grand. So at 150 grand adjusted gross, you can't use that exception at all. And because this tends to be a high earning area, and you guys are disproportionately, given that you're involved in passive investment, even by the standards of this area, high earners, what I found is demographically, this exception does most of you no good. But I thought I'd throw it out there. Let me see what the next slide is, or if it's break time. There are the 7 tests. I'm not going to go through them. There are the 7 tests for material participation. So if you remember, I said material participation, most people use 500 hours in the rental activity to prove it, but here are the 7 ways to do it. Yes, ma'am?
Are there any other advantages besides passive loss?
You read my mind. The question is, are there other advantages for real estate professionals other than passive losses? A, you read my mind. B, please ignore what else you saw in there. The net investment tax, the new Obamacare tax, it's about 4%, I'm rounding a little, 4% on passive income, including rentals, interest, dividends. Now I'm using passive in a different sense. 4% tax on dividends, net rental income, so you have to show profit, et cetera, That applies to brackets filing jointly, 250 or more, adjusted gross, single, 200 or more. So again, demographically, it would apply to a lot of you in this room. If you're showing rental income, you've got this additional tax. If you qualify as a real estate professional, the net investment tax does not apply. But let me give you a caveat. Here's my caveat. Let's say you have a bunch of passive losses, and I mentioned if you sell a property, all the losses that build up on that property the day you sell come unbundled. You can use them to create a net loss or reduce your gain or whatnot, because each property is a different activity. Once you become a real estate professional, those 10 rentals are one activity. And in order to unbundle prior passive losses that are sitting on your return, you would have to sell all 10 properties. You have to sell the whole activity to release losses. So now you have some math to do. You estimate, you get a spreadsheet, and this is the annual tax planning that a lot of you don't do. A lot of you have tax people that you only talk to when you do returns and you don't plan. That's a huge mistake. The planning you have to do on this is, let's assume you qualify as a real estate professional, and it would reduce your net investment income tax, the NIIT, the Obama tax. It would reduce it. You have to make a net present value calculation of how much tax would it save versus how much losses does it defer, because now you have one activity, so if you sell one property, those losses don't come unbundled. Or maybe what you do, if it's feasible, it isn't always economically feasible, but if it's feasible, maybe you sell the properties that have the losses on them, then elect the real estate professional status to avoid the net investment income tax, except on Thursdays, because there's always just another rule, right? There's just always another rule. That's the nature of law and bureaucracy. Let's see what the next slide is, if it finishes this topic. Yeah, depreciation. We'll hit depreciation when we come back from the boys' room. Briefly, this is not a sales fest, so my sales pitch, to the extent I have one, is very gentle. We sell 3 courses, and I'll talk more about them, but during the breaks, if you want to look at them, one teaches you how to do bookkeeping. It's $300. It has a plug-in to QuickBooks, and it teaches people who have no clue about bookkeeping how to do it. There's one on entities. I'm not really getting into entities, but if you want to see how to set them up, which one to set up, how many to set up, which state to set it up in, which we already gave you that answer, not Nevada, right? Wherever you're doing business for rentals. How to maintain them, etc. There's one back there. It's $299. To give you an idea, by the way, my time is $3.50 an hour. Those will save you a lot of time. And then I'll talk a little bit more about what we're doing with IRAs, because I'm doing a workshop. If you're interested in a 2-day workshop intensive on IRAs, and after we talk this afternoon, you will be. There's too much money at stake not to be. There's so much at stake. I will be coming back on November, I think it's 12th and 13th, right around Armistice Day, whatever that weekend is. God, there's a blast from the past. I think you call it Veterans Day now, right? Hey, it's like 1911, all right? I'm a little behind. But we'll be coming back for a workshop. I'll talk about it more, but bottom line, there are things to leaf through in the back.